Our first word is a credit card. A credit card is known as an IOU. So where you owe the bank money. A debit card is similar to a checking account. This is your money. So when you use your debit card, it gets taken right out of your account. Where when you use your credit card, you have to pay it back. So a credit card statement is a report on the activity this month. It can be paper or digital. And we'll go through what a credit card statement looks like.
Should you own a credit card? Okay, but realistically, do you think it's smart, like in college, to have a credit card?
I think that's up and down.
I would argue yes, because there's something called a credit score. A credit score determines whether you're allowed to take out loans in the future. If you've noticed that your own spending habits with your own money is pretty poor, then I wouldn't have a credit card. Because if you can't control yourself with a credit card, you can get sunk really fast. What I would suggest is that you get a credit card when you're in college, and that you buy your groceries and your gas with your credit card, and you pay it off every month. Because if you pay it off every month, you never get any fees, you never get charged interest, you never get a finance charge. You just basically owe the bank whatever you spent on groceries and gas that month, and then you pay it like a bill. And then the bank knows, and they keep a record of it, not just the bank, but they keep a big, like, huge database record of it that's shared between all of the lenders and all the banks that has your social security and number on it that says this person pays off their bills and they pay off their credit cards. And that way, if you ever need a loan for a piece of farming equipment, a loan for a car, a loan for a house, then you have a credit score that says that you pay off your bills. Anybody have a question about that? We're going to talk more about credit scores another day. We'll talk about the range of credit scores and what you're looking for, that kind of thing. Right now, anybody have a credit card? So right now, none of you have a credit score. So is that good for you or bad for you? It means you're inexperienced and it's an unknown. Would a bank give you a loan without a credit score? Depends on the loan. I mean, if you want $1,000 to cover the difference of buying a car and you don't have that last $1,000, they'd probably take a chance on that. Would they let you buy a house? No way. Would they give you $10,000 for a car? No. So, if anybody in here is rich enough to pay everything with cash for their entire life, first of all, good on you. And second of all, you don't need a credit score. Great job. But if you ever need a loan in your life, you're going to need a credit score at some point. So during college or during the first few years of your 20s, it's a really nice time to build up that credit score and get a really excellent credit score just by paying off your credit card every month.
Okay, So now we're gonna go through the credit card receipt notes. Okay. So this looks like any other receipt that you may get. This price right here is the price of the item you bought. The 99 cents is the sales tax. And the $12.98 is your total. Now your account number, this is your whole number, but why might they only list the last 4 digits? Yeah, so it's confidential. So this is your credit card number. And then this is your expiration date of your credit card. Do you think you should keep your credit card receipts? Yes, you should, because then you can reconcile and make sure that your account is lining up with what the bank is.
Mm-hmm.
And like you're paying the right amount. You're not like overpaying.
Has anybody's parents ever had to cancel like a credit card or a debit card because there were some fraudulent charges on there? It happens. It happens for sure. Okay? So you got to keep track of it, because sometimes if there's some sort of breach online where credit card numbers get stolen, it's possible for it to happen. It's happened to me once, where I had to call the bank and tell them about $2,500 worth of charges on my credit card over 8 days that were charged on there by not me. So if you find out about it 3 months after it happens, they're not going to give you your money back. But if you find out about it within a month, they'll usually figure it out and return all your money.
What happens to the money, like, if you overpay? Like, you don't get that back?
What do you mean overpay?
Like,
Oh, you mean like, suppose you paid back your credit card, but then you reconciled it later and you were like, hold on, 100 of this
Yeah.
wasn't mine. If you catch it within a month, then the bank will refund you and give you that money back. The bank every bank has like a fraudulent department where they will, even if like the police don't catch the person, even if they don't figure out who took it and they get the money back, they will still give you your money back as long as you catch it pretty fast. But like I said, if you figure it out 4 months later, that's going to be a tough sell.
Okay, we're going to do the other side. Start with the top. This 12-digit number, that's your account number. So this is what a credit card statement would look, either paper or digital. This date right here, that's the month's closing date. But with that being the closing date, that means that all your charges for that month, so starting December 1st to December 31st, that's what you're going to get billed in this credit card statement.
Oh, and to be clear, I'm not suggesting you get a credit card right now. I'm saying that when you start your life after high school, that'd probably be a good time to start doing that kind of stuff. By the way, you can get a loan if you don't have a credit score, but then somebody with a credit score has to co-sign for you. So let's say that you want to get a $10,000 loan for a car right away in college, then your parents would probably have to go and sign for you. I mean, you sign as well, but what that means is that if you stop paying your bill, they have to pay it.
Right here, where it says total and then available, they're allowing you to spend $500 total per month on your credit card. So you're going to write $500 is allowed. But you've spent already $330. So you only have $170 left to spend.
The more you pay off your credit card on time, the higher they raise that amount of how much you could put on their credit card, because they're trying to balance it out. They want you. Do you think they want you to pay off your credit card on time?
No.
They're a business. They want to charge you interest. They want somebody who will pay it off, but maybe a little late. You know what I mean? So they can shave that interest off and get paid. But they definitely don't want somebody who's going to walk away from a credit card account, right? That's the risk, because they don't want to lose all $500. They just want to get some extra money from you in case you forgot to pay it off on time. Yeah.
What if they go over the $500 total?
What if somebody charges over $500?
Yeah.
Then your credit card will be refused. So if you are at a gas station or whatever and you put in your credit card, it'll say card declined. So it'll have on it like how much you're allowed to take out, and if you go over that amount, they won't let you use it. Your amount that you can take out slowly increases. I think when I first got my credit card, I was allowed to take out $100 or $1,000, and now I can, because I've been paying off my credit card steadily for many years, I can charge up to $15,000 on my credit card. So they just keep on raising that amount the more reliable you are. So.
Right here, this bracket is showing you all the details of purchases that you made in the month.
Tyson, have you ever seen in like a movie where somebody's credit card is declined and they say they've maxed out that card? Has anybody seen that? Like in a movie or TV show where that happens? That's what I'm talking about.
Your APR it's a rate that's added if you don't pay off your credit card.
Do you think this number is realistic? 19.8% is what you'll be charged if you go over, or if you don't pay it back on time? That is 100% realistic, sometimes higher than 19%, but it's an annual.
Yeah, this is annual, so this is your monthly rate right here.
So if you don't pay it back that month, you'd get charged 1.65% on what you haven't paid back. Credit card annual APRs are high. Lots of APRs are high because banks are a business.
So what's the annual then? Like, obviously, if you don't pay it back in monthly, but like, that means if you don't pay it back in a year.
No, they're just saying that like if you added up all of the monthly rates, because they're required to report to the government what their annual percentage rate is. So that's if you never paid it back in a year, you'd be paying 19% of what you didn't pay back. It's kind of a total. They're not going to wait till the year's over to charge you. They're going to charge you by month.
Okay. So let's go to this total. The total is $285. So this is what you owed last month.
Can you raise it up a little higher?
Mm-hmm. But then right here, the $140, that's what you paid already. So you paid off $140.
So did this person pay off all of their bill? No. If there's some reason that 1 month you can't pay off your whole bill, paying off as much as you can is still a good idea.
After you paid the $140, you continue to make purchases that month. So you spent that much. So additional purchases.
By the way, doesn't it seem silly that they have this line and then they have the exact same line beneath it? Anybody know why that would be? This person only has one credit card. If they had multiple credit cards from an institution, then it would show their total. Why would you have multiple credit cards from one institution? If what? Oh yeah, that's possible. If you like closed one account and then another one came up, that's possible. Another really good reason is if you have like a business account for like your farm or something and you want to keep your personal ones separate, you might have 2 different charge cards for something like that. Have you noticed that you could get a credit card from like Target, you can get a credit card from Walmart, almost every store has their own credit card? Yeah. And you can do that, and those credit cards work just like a bank's credit card. They'll give you statements every month exactly like that. Sometimes they'll give you discounts at that specific store. However, if you have too many credit cards at too many places, your credit score starts going down. It's about, I only have 1 credit card, but you could have up to like 3 or 4 without it impacting your credit score. So as long as you're responsible, like truly responsible, if you're like, hey, at Target I get 5% off if I pay with the Target credit card, I'm going to have my bank's credit card and I'm going to have my Target card. I'm going to pay them both off every month. If that saves money, that saves money. You just have to be really responsible.
Okay. And then we see this, the $2.39. This is your APR.
So it looks like the bank is making $2.39 off of this person because they didn't pay off their credit card last month.
And this balance, this is what you owe. And the $30 is the minimum payment.
What do you think happens if you don't pay your minimum payment? They shut down your credit card. Because they do want somebody who's paying something every month. I mean, they prefer it if you didn't pay all of it, right? So they got some interest, but they do want somebody who is still paying off their credit card. So.
Okay. Now we will be giving you a worksheet.
This worksheet is just a picture of a credit card receipt and a statement, and you just say, like, what was the previous balance, what was the stuff, kind of like a look at it and find out what things are. You don't even need a calculator.